So I spend a ton of time parsing through financial websites to see what is currently going on, and let me tell you guys, it is not looking pretty, especially when you consider the fact that Google Trends is showing how the term "can't pay my credit card" is at record levels. So this essentially means that individuals are going on Google at a record level and typing in "I can't pay my credit card." Now, this economic pain is in sync with what I've been saying on this channel for quite some time. In fact, I've been saying it over and over again that you just can't look at the stock charts or only look at the fundamentals. You have to look at everything in confluence, and by understanding what's going on in the economic picture, you could kind of provide a more holistic or a better idea of what is actually taking place. And look, guys, the writing is on the wall, and this is the exact reason why in Elon Musk's last earnings call he sounded very concerned of what was actually taking place. Now, I want to go ahead and cover what exactly we are currently seeing with Tesla stock and the overall markets, but before I go ahead and cover that and provide my outlook, just a friendly reminder that if you are brand new to the channel, make sure to tap that subscribe button. This way you don't miss out on any future video, and as an incentive for every individual that taps the subscribe button, my cat Mochi will get an additional treat, and trust me guys, she loves her treats. Now, if we take a look at Tesla stock, we are seeing somewhat of a green candle taking place, and this is actually in sync with what I just said in yesterday's video, talking about how it's expected to see some relief for Tesla and the overall markets. In fact, if we take a look at SPY, the S&P 500 index ETF, we see a similar type of relief taking place. Now, in yesterday's video, I talked about how this relief was most likely going to be ephemeral, or in other words, short-term or short-lived, and not something that I expect to go into all-time highs. I believe that going on further into the future, there's still going to be some more economic pain that's going to bleed into these earnings. But I said that a lot of the selling that we saw towards the end of October was due to something called tax loss harvesting. See, we have to understand that a lot of these mutual funds and bond funds, they end their fiscal year on October 31st. And so naturally, they may employ this strategy where there's a lot of selling taking place because they're trying to reduce their tax liabilities, right? And so you don't have to completely understand the whole concept of tax loss harvesting, but one of the things I've said in previous videos is that, hey, once this is over, we could possibly see some relief for the markets, as well as the fact that in just a couple of days, we get an update on monetary policy. And as I've been saying for months, it's most likely that the feds are going to pause. They're not going to hike interest rates. Of course, if they do so, that would cause a bit of a uproar or a surprise, and that would cause the markets to sell off. But I mentioned that we are going to most likely see a relief, but again, it's not something that I see actually sustaining itself. And I want you guys to take a look at this chart over here, just showing us all the job cuts that took place in October is actually increasing at a rapid pace. And one thing I want you guys to take notice is that the biggest sector experiencing the most job cuts is in banking. Now, I come from a background in banking, and one thing I can tell you guys is that this is pretty much a leading indicator. When you see a bunch of job cuts take place in the finance sector, that means that things in the economy are not doing too well. And I want you guys to just picture this. Picture the mortgage bankers who get paid based on the amount of mortgage loans that they give out. When no one is able to afford a house because everyone is broke, well, it's hard for these mortgage bankers to actually give out loans. Think about bankers in the retail sector where they give out credit cards and loans. Well, when credit is tightening, it's difficult to actually do that. And so these financial institutions, what do? Well, they start cutting jobs. And so typically what you see is the finance sector is like the first sector that starts cutting jobs, and then eventually it rotates and bleeds out to several other sectors. Of course, there are some sectors that are pretty much immune to a recession. I'm sure you guys know which ones those are. But again, this is a leading indicator that things are not looking well. On top of that, we recently got the consumer confidence report today, and we saw that consumer confidence is falling to a 5-month low on worries of inflations, rates, and conflicts in the Mideast. And we have to understand that sentiment is everything. When there's a lot of uncertainty in the markets, well, people tend to take their capital out of the markets because they don't want to lose their hard-earned cash. And so this is most likely one of the reasons why why if we continue to see sentiment kind of dwindle down, well, we could see risk on assets like equities or stocks continue falling down. And so that's why I say that this relief, you have to be careful. It's not necessarily something that I believe is going to sustain itself, and I believe that going further there is going to be much more pain. Now, quick plug, I do have a free Market Pulse weekly insight where is going to be a link in the description of this video, or also a link in the pinned comment section below, where every single week I send out an email talking about what's currently taking place and what are things that we should be aware of as market participants. And again, it's completely free. You just put in your email and I send out that email to you guys, so there's no reason not to join. So definitely check out the links in the description below. But with that said, I want us to go ahead and hop into my laptop. This way we could take a look at Tesla stock and the overall markets and everything else from a technical perspective, but as well as cover some other topics currently going on. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and there's quite a few things I want to cover. So if we go ahead and look at a 5-minute time frame, we see that Tesla ended the last day of October with a green day. In fact, if we actually look, we did close a bit higher from the close of the prior trading session. If we map out roughly the close of yesterday to the close of today, about 1.58%. So it's not like a huge green day, but definitely closing green after, if we look again, a lot of red consecutive days. In fact, yesterday was a huge red day for Tesla, and that's why I expected that we were going to see some sort of relief, especially when you have this many red days. And then if we actually take a look at the overall S&P 500, same thing, a lot of selling, but finally starting to see some relief. Now, before we actually talk a bit more about Tesla and looking at the price action, because I will talk about what's going on from a technical perspective and what it is that I'm seeing, I do just want to provide a friendly reminder that I don't necessarily have a crystal ball, and I'm flattered that most of you guys think that there is some sort of mystical aspect into the analysis that I do. But again, just a reminder, I just look at the technicals, the alternative data, the fundamentals, the economic data, and so on, right? And so I put that together, and that's why I'm fairly accurate on what's actually taking place with the markets, but I don't necessarily know when price or where price is going to go. Obviously, I don't have that insight. I wish I did, right? And one of the most comments, or one of the most frequent comments I get is, where do I see Tesla going? So again, just a friendly reminder, I don't have a crystal ball, but I will talk about what are some areas I am paying attention to. But before we actually talk about those areas with Tesla, I want to highlight a couple of things that definitely impact Tesla stock as well as the overall markets. First, we'll talk about what's impacting the overall market. So right now, the 10-year treasury is at 4.92%. One of the things I've covered within the Push and Profit private group, and I'm now saying it publicly here on this YouTube channel, is that if we go above 5%, that's typically where we're going to see some pushback in the equities markets, or in other words, that's where we're going to see stocks fall down, because as I mentioned quite a few times, that the higher the 10-year treasury goes, the more less likely the appetite is there to invest in stocks. Why? Well, why would you want to invest in stocks towards the end of the year when you're not sure what could happen? Stocks are risk on assets versus you could buy government bonds, and although the bonds may go down, if you hold them long enough, and if you do hold them, you get this guaranteed yield. And so what I'm trying to say is that there's this incentive where when yields go up, you're less likely to have capital flow into stocks. In fact, you have capital exiting stocks and going into these attractive yields. And so if we hit on a 10-year treasury back to that 5 and above level, well, that's something that could cause some pain for the overall markets, not just Tesla. If you guys are looking at other stocks as well, it could cause some pain for the overall markets. And so that's why I often say you want to pay attention or have the 10-year up. You want to see what's going on. And even if you're not trading bonds, I don't trade bonds. I typically, I don't even hold ETFs and treasuries or none of that, right? But it's definitely a data point that you want to pay attention to, okay? So with that said, I also want to share this article right over here. We had a big day for Tesla, and that's partly why we saw some of the relief in Tesla as well. As it says in this article that there was a big win for Tesla today. as the first trial in the United States focused on its autopilot system, as there was allegations that claimed that the autopilot system directly contributed to a death, but a jury rejected that claim. And so in that case, two passengers involved in the crash back in 2019 accused Tesla of knowing that the autopilot was inherently defective when it sold them the Tesla in question. However, long story short, I'm not going to go ahead and read the whole thing. We had a win in court for Tesla on its autopilot system. And so not a huge win for Tesla. I don't think it's that big of a win, but one of the main concerns for Tesla is its regulatory issue on FSD going into the future. We know that fully self-driving or having Teslas become autonomous, that's one of the reasons why a lot of these fund managers had these crazy valuations. I mean, you hear Kathy Wood saying that, in her worst case, she sees Tesla being $2,500 a share within the next few years. And so a lot of those valuations are put in place with the idea of robo-taxis and fully autonomous driving. And so, of course, seeing a little bit of a win with its autopilot system, right, which is different, but just seeing Tesla win in court does provide some optimism that maybe this idea of FSD becoming a thing in the future could potentially happen. Of course, I don't have a crystal ball. You guys have to make that prediction on your own. Do you think FSD is likely to happen? Yes or no, right? And so that's where most of the valuation comes for Tesla. Now, one thing that I've shared in the past, and I know a lot of Tesla bulls don't like this, I talked about how I'm not comfortable buying Tesla, even though when Tesla was falling down after its earnings and it started bouncing up over here like it did in the past, I said I don't expect Tesla to actually bounce up, and I expect more selling pressure, and that's exactly what we saw. And this is because Tesla's still trading at a high multiple, right? And that's something you have to understand. You have to look at things from its fundamentals. And right now, without FSD actually being a thing, I could see Tesla possibly having a bit more relief and then possibly coming back to these areas where we were at around these low 200s and getting rejected. Of course, is that likely to happen, or is that guaranteed to happen? Like I said, I don't have a crystal ball. We could absolutely see Tesla maybe go all the way up, and I could be proven wrong, right? But from my outlook, right, and this is just my personal view on Tesla, I don't see that happening. I expect Tesla to get rejected around this area and continue falling down. And, I say this as a long-term bull for Tesla. I don't, of course, it sucks when Tesla goes down, but I see that as an opportunity to buy more into Tesla in my long-term portfolio at a reasonable price, at a reasonable multiple. It doesn't mean I don't want Tesla succeed. It's just that right now I just can't justify these prices. And so some of you guys may ask, well, where do you see Tesla falling, right? And so that's also another debate, right? I see it in the comment section very often. And I'm looking at things from level to level, right? And so one of the things I've said is I'm looking at Tesla going down to this 180 level. And the reason I say that is because when we look at the volume profile, and this isn't on everyone's brokerage. Some brokerages don't offer this. I use the Webull platform, and they offer volume profile. And we have to understand that volume by price on the volume profile is completely different from traditional volume by time. And so when there's low volume relative to price on the volume profile, that means that there's less exchanging between buyers and sellers at a particular price. And so we see this low amount of volume at these areas. And so that's why when there's selling pressure, well, there's less exchanging between buyers and sellers. And so if sellers are in control, Tesla falls downwards. And so that's why you see rapid movements during these low areas of price relative to, or volume relative to price, right? And that's why when we saw buying pressure, Tesla pushed up. Now we're seeing selling pressure. And so if we do indeed see more pain, and I believe that we are economically, it's still challenging, especially with the amount of of auto delinquencies that we're seeing. We're seeing cars get repoed at an extreme rate, and it's because people are financing new cars, and even with stellar credit, right? Even at an 800 plus credit score, you're still paying a 9% interest on these auto loans, and that makes it very unaffordable to afford any car, especially a Tesla. And so with that still being the case, it's still going to be a challenge for Tesla, and that's why in my view, I see Tesla possibly having a bit of a relief and then falling downwards. And around over here, this like 180 level, that's where we start to see more of a higher volume relative to price, where kind of buyers step in. And so that's the area that I'm watching. But I also see in the comment section below some individuals say, "Hey, Justin, but you're ignoring this gap over here at around $145, right?" And it's not that I'm ignoring that area. I'm just looking at things from a level to level perspective. So first I want to see Tesla at 180, and if we do get there, and once we're there, if we do happen to get there, then I'll go ahead and evaluate what is happening from a technical standpoint, and also what's happening economically, fundamentally, etc. Right? I don't want to make too far of a price level or price target prediction. And there's still ongoing data that I want to pay attention to. But one thing I want us to be aware of is there is a lot of volume relative to price around over here. And so that could provide somewhat of a base support for Tesla. But again, it could fall. It could absolutely fall down. So the individual saying, "Hey, but Tesla could go to 145." You're not wrong. That is a possibility. I mean, at the end of the day, everything's a possibility. And so what I'm just trying to say is that right now, I do believe we may see some more relief, but I don't expect it to sustain itself. Now, with that said, I don't have much more to say in regards to Tesla. If we look at the overall markets, same thing. We're kind of below this descending trend line. I believe maybe the overall markets can kind of push upwards and then possibly get rejected over here and again fall down to this area where there's a lot of volume relative to price. But I do want to provide a friendly reminder that what I say in regards to the overall markets and Tesla is just my idea or opinion of the markets. At the end of the day, you should never trade or invest based on anyone else's opinion. So I don't want to see any comments in the comment section below. But Justin, you said this and you said that. Look, you should only trade and invest in whatever you see value in. You should not follow what I say or what anyone else on YouTube or X.com says, or any fund manager like Kathy Wood or Gary Black or any other fund manager. At the end of the day, you have to decide where is the best place to employ your capital and what you should do with your money. Because at the end of the day, you work hard for your money, and it does not make sense to blindly follow someone with your money, right? I wouldn't do that with my money, and so that's why I do everything I can to look at what's going on and how I want to deploy my capital, or if I want to have cash sitting on the side. And right now, I just personally don't find it attractive to add more into my long-term portfolio for Tesla, but you could absolutely disagree and want to add more at these areas. Again, you do whatever you see value in. But with that said, hopefully you guys enjoyed this video. Before you go, make sure to watch this next video right over here. And if you already saw that video, make sure to check out this video right over here, and I'll see you guys on those next videos. Take care, guys.